Okay. All right, thank you everybody for raising your hands. Without further ado, let's get right into it. All right, so my name's Justin. I'm a business development manager here at Fullerton Markets, and I have a special class on the rising and falling wedge patterns. All right, so some of you guys have been trading for quite a while. Some of you guys are probably just getting into trading. And some of you guys are just looking for another strategy to supplement your current trading, all right? I'm very happy to inform you guys that the wedge patterns that we will be discussing later is actually quite powerful and you guys can look out for them in the future, all right? So let us begin. There are basically two wedge patterns, all right? But first of all, what is a wedge, all right? A wedge is basically 2 points that are they're fairly large in the beginning and they move closer and closer together towards the end, all right? So we can form this pattern a lot on our charts, okay? So we have two of them. The first being the rising wedge pattern with the keyword being rising, meaning it is moving upwards, all right? Or it is following candles that are moving higher. And the falling wedge pattern, meaning prices are moving towards the downside, okay? So let's take a look at the first, which is the rising wedge pattern, all right? So this is what the rising wedge pattern looks like, all right? When you have, when you're looking at your candle, your candlesticks, all right? I'm sure you guys have managed to use some lines that say the support and resistance lines through the horizontal line, or perhaps you guys have used the trend lines, all right? For this one, we will be using the trend line, and later on, I will show you guys how to access, all right? So in a rising wedge pattern, prices are rising, which means that the bulls are in control. When we say bulls, all right, we mean that people are buying, people are more keen to buy, all right? You might be wondering, why is it called bulls, all right? Well, if you've ever seen a bull, all right, if you've ever seen let's say a clip on YouTube about bulls running amok in the streets, they do that in some parts of the world, such as Spain, like there are matadors there. If you've ever noticed how a bull attacks, all right, imagine this is a bull, right? When a bull attacks, it will stoop down because it has horns, and then it will attack upwards, okay? It will attack upwards. So since it is attacking upwards, this is, this is how we explain why we call prices moving upwards a bull market, okay? Easy, clear so far? All right, so the bulls are in control, prices are moving higher. Now there are a few characteristics that we have to look out for in a rising wedge pattern, all right? The first being, if you look down here, making higher highs, all right? What is a higher high, all right? Well, if you look here on the first high point right here, this is a high point, correct? All right? If you look to the right, this is another high point, but this high point is higher than the previous high point. So this is known as a higher high, all right? And then there is another point here, which is higher than this point, and that is known as another higher high. Here's another higher high, okay? Now, the second thing we have to look out for are the higher lows, all right? What do we mean, higher lows? It sounds a bit contradicting, right? It's a bit contradictory. But if you look down here, this is a low point in the chart. However, above that, there is another low point, right? So it was high, went low, went high again, went low again. But this low point is still higher than this low point, all right? That is why this is known as a higher low, right? And this is another higher low, and this is another higher low. Clear so far? All right. So the line above is known as the resistance, okay? If you guys have seen our other videos, then the resistance tells you that this is a price that is above the current price, all right? And opposite to that, we have the support, which is the level below the current price, okay? So a few things we have to first establish is the support and the resistance, along with which are the higher highs and the higher lows, okay? Later on, I will do this on a few charts so you guys have an idea, all right? Let's move on. So how do we actually trade the rising wedge? Well, the thing about this trading strategy is since the rising wedge strategy, prices are moving higher, and at some point prices will drop. Okay, what goes up must come down. All right, and inversely, what goes down must come up at some point. So when we are trading the rising wedge, since prices have been moving higher continuously, we are expecting for a period that it will go down. All right. So when you trade the rising wedge, we are looking to short or enter a sell position. Okay. So once prices break down or break below the support, this blue line down here, this is known as the breakout, we can then ready ourselves to trade. All right. We trade on the reversal. All right. Sorry, rather we sell on the retest of the, this was known as the support previously, right? But since prices broke below and the price is now below this line, this is now known as the resistance, okay? If prices broke up here, this is no longer known as the resistance, but is known as the support. Same thing here. If prices were to climb back inside here, this will then become the support. But since prices broke out at this area, broke down, went up, it tested, all right? It tested this line to see if it will actually go back in or if this area will hold, okay? So this retest of the former support, which is now the resistance, is our key to shorting, all right? So when there's a breakout, wait for prices to move back towards the resistance, and that's when you sell, all right? If it fails to break into in between the support and resistance here, right? We want to short, we want to sell, okay? So how do we actually set up one of the most important aspects of trading, stop loss, okay? We want to enter once there is a retest, correct? This is a retest of the resistance, all right? Where do we put our stop loss? Your stop loss should be just above, right? Just above your former resistance up here, okay? This is where you should be placing your stop loss, all right? Remember that when you have a better entry, all right? When you have a really good entry, your risk to reward ratio is even better, all right? You will make more money while risking less, all right? If you were to enter the trade down here and you were to keep the same stop loss, and let's say your stop loss does get hit, you would have lost even more if you had entered the trade here. At the same time, if you entered here and you did take profit here, you would have made less money if you had entered here, all right? So for better risk to reward ratio, I suggest looking out for the best entries according to the strategy, all right? And remember, your stop loss should be slightly above the resistance, okay? Now, what happens if you put your stop loss inside? If you put your stop loss inside here and not above the previous resistance, well, there is a small chance that, not small chance, there is a chance that your trade will be closed out because of the wick or the line here on this candle. This line could very well close out your trade, which would otherwise have been a successful trade had you followed the correct stop loss, all right? The correct stop loss is above the resistance. Keep that in mind, folks, all right? Better entries, better positions, better setups will make you more money, okay? Let's move on. So how do we actually take profit when we are trading the rising wedge? So a few things that we've already done, my friends. First, we've identified the rising wedge, all right? We know where to set our stop loss. We know where to enter, all right? And the last thing we did is to know where should we be taking profit, okay? Well, the great thing about this strategy is we've actually, we've more or less found these areas to take profit before. And these are the the higher lows, all right? These are all support areas that we can actually enter. These are actually support areas where we can target for our take profit, okay? So these were lower lows, these were higher lows, higher low, higher low, higher low. This is where we would, this is where the breakout is, prices move up. We first target this before targeting the other areas, okay? So remember, the lower lows are the higher lows are our take profit points, all right? Forgive me, slip of the tongue. Okay, so we've done a few things. We've identified, we know when to enter, we know our stop loss, we know where to take profit, okay? And that is just for the rising wedge, okay? Now, let's focus on the falling wedge pattern, all right? Same thing. It's quite similar to the rising wedge pattern, except for the falling wedge pattern, the bears are in control, all right? Remember how I told you earlier that when a bull attacks, it will swoop down, its head will lower, and then it will attack upwards with its horns, okay? Now, the bear is different because if a bear attacks you, all right, if a bear attacks you or perhaps it's fighting with another bear, you'll notice that bears, they are always on, you know, their paws, all right? They're four-legged creatures. Bears will actually stand up on two legs, all right? Raise their front paws and they will attack downwards, right? Something like this, all right? Since this is how bears attack, you know, they attack in a downward motion. That's what we call when prices are moving down, all right? We call it the bears, all right? Or it's a bearish market or it's a bearish trend. It has to, as long as the prices are moving down, remember bears, all right? So for a falling wedge pattern, we identify this when prices have been moving down for a period of time, okay? Making lower highs, all right? So this is the first high, okay? All right, prices go down, it moves up again, but this high is lower than this high. That is why it is known as a lower high. We have another lower high here and another lower high here, all right? It also has lower lows because even though this is a low point, there is still a lower low point here, a lower low point here, and a lower low point here, all right? Previously, in the rising wedge pattern, we were expecting for prices to go down since prices have been moving up. Now we are doing the inverse, all right? Since prices have been moving down, we are expecting prices to move up at some point, okay? We are expecting prices to move up at some point. So a few things we have to include here would be the support and the resistance, all right? Here is a quick rule of thumb for you guys if you want to know what is the support and what is the resistance, all right? Take a look at where the price currently is, okay? Where the price currently is. If it's above the current price, then that is the resistance. If it is below, it is the support, all right? Even if it moves here or it moves up here, okay? All right, so these are the few things we have to look out for, the lower highs and the lower lows. All right, from there we can come up with our support and resistance. But how do we actually trade? Well, once again, we are waiting for a breakout of the resistance, okay? So if prices move up, there should be a retest. All right, here's the breakout. And here is the retest. And this is where we will be buying. All right, this is where we will be entering a long position. All right, a buy position. All right. So this former resistance is now acting as a support. Why? Because prices are currently above this. So it is known as the support. You guys will be entering a long position. All right. Now, what about stop losses? Just like earlier, all right, you enter here, your stop loss should be slightly below your former support. All right. Here on the wedge, slightly below the support wedge. Okay. Excuse me. This is where you should be placing your stop loss. All right. If you place your stop loss in the middle of the wedge, then you might actually get stopped out. All right. Your trade might close even though it was a successful trade. All right. Prices would continue to move upwards. You could very well lose this trade simply because your stop loss was in an area where it should not have been. Okay. So keep an eye out and be careful about setting your stop loss. All right. We have to put it down here or below the previous support. Okay, so we've identified, we know where to trade, we know our stop loss. Next, we need to find out where our take profits are. Okay, now we will be targeting all of our previous highs. All right, these resistances are areas that we can target. All right, these were the lower highs previously. This is where we want to enter our trade. All right, so if it breaks out here, you buy down here, you target this, this, and this, and your stop loss is down here. Okay, later on, I'll give you guys some live examples. Okay, these are some examples, but later on we'll go to the live charts for even better examples. Okay, so we are looking at the euro dollar on the daily time frame. Euro dollar daily time frame. All right, so as you can see, a wedge was formed. All right, this is a falling wedge. All right, so the bears were in control. These were lower highs. This is a high, this is a lower high, lower high, lower high, lower high, and there were lower lows here, 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 and here. This was enough for us to create the wedge pattern. All right, so after creating the wedge pattern, we know this is a falling this is a falling wedge pattern. We know the bears are in control, and we are now waiting for a buy position. We are waiting for prices to move upwards once again, since prices have been moving down for a long period of time. If you look here, this was around January. It is already November of, sorry, it's already around October, right? September, October, where prices have stopped their downward descent. And, you know, the people could be like, hey, it's about time for us to move upwards. All right, the euro dollar has been falling for too long. Perhaps now is a time to be buying. All right, so that is why this pattern was formed. All right, now the prices have broken the resistance that is now the support. This is where we buy. All right, as you can see here, this is the breakout and this is the retest. This one candle here that moved all the way down here. All right, this is where we should have bought. And your target profit, as stated previously, are the lower highs here, 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 and here. Okay, now let's see if this trade actually continues. All right, your stop loss should be down here. Okay, and fortunately for us, prices did touch three of our lower highs. All right, now you might be wondering, what about the lower high up here or the lower high here? All right, here or here. You might be wondering, are they not included? Well, yes, they are points that you can target. However, just because they are there does not mean prices will necessarily move towards them. Okay? Keep that in mind. Just because we set up the line here, we set up to take profit here, does not mean prices will for sure move there. There is a chance that prices could move up here, right? Somewhere in the future, right? But it is much better for us to take note of the closer take profit points, all right? And just act accordingly. So from your buy here to here, let's do a quick count. 1.09790, 1.23. This is roughly 1,400 points, if I'm not mistaken, or is it 14,000 points? Anyway, this is a very good trade, and there is a lot of money made here. Okay, so this is a falling wedge pattern. Let's look at another example. This is a rising wedge pattern, all right? Characterized by higher highs and higher lows, okay? Higher low, higher low, higher low, higher low, and higher low, all right? So since prices have been moving upward, we are now expecting prices to start moving down, correct? Since we are now expecting prices to move down, we will be entering a short position or a sell once there is a breakout and retest, all right? So this is the breakout here, and this is the retest candle, right? As you can see, the wick moved towards here. That is enough for you to enter the short. You could have, all right, you could have entered the short here. So our target profit is this level, and this level, okay? These levels are where we are taking profit, and true enough, prices do go down low, all right? So your stop loss should have been somewhere up here, all right? So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.